Hello everyone, and welcome to another episode of TA and Chill. Thank you so much for all the kind words that I got on Twitter. Not everybody is as receptive to, you know, honest technical analysis um, as you guys are. You do get a lot of criticism from people online for trying to tell it as it is. So I appreciate all the support I've had of everybody. So um, I know we had the poll on Twitter earlier tonight, and it was a resounding victory for AMC. Um, GME a distant second, and apparently no one cares about Bitcoin at all for whatever reason. So let's get into it, and I will try and keep this video. I say this every video, I know I do, but I will definitely, most definitely, try and keep this video under an hour. No, 20 minutes, maybe 15 minutes. Please feel free to drop a huge number of dislikes if I say anything that you don't want to hear, because obviously I am primarily here to give you all confirmation bias, and that's really all that matters at the end of the day. And everything I just said was sarcasm. So let's get into it. AMC. What's going on with AMC? So where to start? Um, let's zoom out. Let's just look at the let's look at the entire structure, going all the way back to May 2021 and the run up that happened before then. So let's put on some some Fibonacci's just to give some context here. Um, Now it depends on where you want to draw the Fibonacci. If you draw it if you draw it more recently, it is questionable about whether these price movements are really breaking down the larger kind of uptrend that we've been in. Um, if you see where I've drawn it from here, I've really drawn it back from $1.57. So we're winding the clock back all the way to the very beginning of this entire process, because that's the question everybody really wants to know is you know is AMC still holding up? And I'll try and give kind of a bearish scenario and a bullish scenario, to be completely fair to AMC. I'm not here to bash on it, just to say what I can see on the charts. And so zooming out from the very beginning of this whole process, measuring it to the top there at 62 approximately, you can see that price has retraced back into this pocket here between the 0.65 and 0.618. This is known as the golden pocket in Fibonacci. So, technically, does this break the broader structure? No, not necessarily. Um, it is lower than I would like for a couple of different reasons that I'll explain using some regular indicators. So just hide that for a minute. Okay, so on the on the daily time frame here, we've got the Rocky Outcrop RSI EMA. The RSI is the green one, the EMA is the blue line running through there, and you have the bear control zone down here, and you've got the bull control zone up here, and they mean exactly what you think they mean. So below 50 here, the trend isn't really good. The momentum is weakening, and this has kind of been a problem with AMC for a little while now. Ideally in an uptrend, you would really want to be above, 50, 55 approximately here. And if I just tweak this to be 55, then that should help explain it. That's how I really define being in an uptrend. And if you look at kind of the behavior of AMC um, from the beginning of October to the present, the issue that I have here with AMC is that it is not spending enough time above 55, let alone being in this kind of ideal bull control zone up here, because there's no such thing as being overbought in an uptrend, and there's no such thing as being oversold in a downtrend. So there's nothing, you can persist in this bull control zone here for a long time, and you can have a lot of powerful price movements. But we've only managed to touch that on one occasion, on the 8th of November. And as you can see, if you look at the MACD, the moving average convergence divergence, if you don't use it, it's really simple to use. You should definitely try it out. You can see that this last run that we had here, there's structural problems with it in that the highs on it were divergent. And for a trend to be valid and have continuation afterwards, you would really want it to be a healthy uptrend and to not have these ugly divergences going on inside it. So the broader point that I'm trying to make there is that there's some structural problems with AMC that do make me a little bit hesitant to be mega bullish on it. So let's look at the moving averages. This should help to illustrate my point as well. So I'm using 921 and 55, so all Fibonacci numbers here, exponential moving averages, so they're more responsive, and then just the regular simple moving average 200 there, because that's really the baseline which a lot of big institutions will look at to decide whether an asset is essentially bullish or not. And so while kind of the broader kind of Fibonacci structure is technically still in place, the problem here is that we have been underneath this 200 simple moving average here in purple since the 1st of December now, and that's really ugly. What I would have liked to see is maybe I can find an example. Behavior like this, where it gets close to it, and then it's like an electric fence, and it just jumps right off it. And that's not the behavior that we've seen from AMC this time compared to other times. So, be very wary of people saying that, this is a repeating pattern and stuff. And I understand that the price action can look very similar, but when you dig behind the price action, you'll see that there are different elements that are driving it, and that can make that price action, although it looks very similar, we can make it very brittle, very easily broken. So the problem that I have here is that AMC broke the 200 SMA on the 1st of December, and instead of leaping out of bed and singing for joy, it's it's broken it and it's gone underneath it. And you did have some warning that not everything was going great in AMC, because you had this negative cross on the DMI here, the Rocky Outcrop DMI. If you haven't tried it, you should join Rocky's Discord. He's amazing, and check it out. But you had this the negative DMIs, or the negative DI here, the pink line, which is telling you the strength of the negative trend, taking over control of the overall trend here. And the line in the middle here is the ADX, so the average directional strength of both of them combined together. And for an asset to really be in a trend at all, and obviously we all want to be in things that are trending, that are going somewhere, the average directional trend really needs to be above 23.6. I won't go into reasons why it's 23.6, but just believe me, it's 23.6. And you can see the way that the DI kind of interacts with that level, and I consider it a trend validation level. So people ultimately asked AMC, are you in a bull trend or a bear trend on the 29th of November here? And the answer came back, no, it's still in a bear trend. So that's not what I want to see. And let's zoom down just to the 4 hour a little bit here. I mean, on the daily, which needs a bit more time to kind of sink in, but this this increasing negativity is not what I want to see. If you go down to the 4 hour, it's reached just under 40, which is where most trends get exhausted. So, is there a possibility that this is that this particular bear trend is exhausted? It's possible, but what what also concerns me is that you can see the momentum here still fading downwards on the 4 hour. So this is a problem, and it is trying to get back out of the bearish control zone here, and it's not quite managing it. One positive piece of news that I can give, let me just draw it on for you so you can see. So if I draw a trend line here, down, and here, up. Um, so what that is showing you is that the RSI is making higher lows while price action makes lower lows. So superficially, price going lower, obviously it's not what anyone wants to see. We all want AMC to do really well. But there is a positive side to this, and that is that this is bullish divergence. So in a sense, you could argue that this downwards movement is invalidated in a way. This could potentially be a bear trap. That's kind of the bull case there. It's not to say that it can't continue going lower. Maybe you'll just get a bounce out of it. I don't know. But this is bullishly divergent at least. Um, and let's I'll just remove those. So let's look at some key levels of support and resistance. And I'll draw them on for you so you can see exactly what I'm talking about. Let's snap on Renko candles here. They cut out all the noise. They only switch the other direction once a certain amount of price action has occurred. So let's put some supports and resistances on here. So 1, 2, 3, 4, 5, 6, 7, and that would be the maybe is there one more? I suppose you could argue that 1988 is also one there. So we go back to the regular candles, or even Heikin Ashi. Heikin meaning average and Ashi meaning pace. So the candles are a kind of averaging out of all the messy price action. So the problem here is that AMC really can't afford to go any lower. Like this is pretty much it goes back to the very beginning of the entire formation. And if you trade Bitcoin a lot, you've probably noticed how Bitcoin likes to do something similar, where you get a very large kind of structure, and then eventually it comes back to where it all started before moving on. So something quite interesting there. But let's take a minute to look at Ichimoku to try and understand the broader trend as well. So going up to the daily here, let me simplify it for everybody. So I know it's quite ugly to look at, but it's actually very, very simple and easy to use. So I'll remove the lagging span. I'll just focus on these. So you see the clouds here. These are areas of support and resistance. And as you can see, again towards the end of November there, we broke through the thin area in the cloud, and we've been kind of hanging around down here ever since then. Down on the 4 hour, similar story. 1 hour, yeah, thin clouds. Golden cross on the 7th of December, death cross on the 9th there. A little bit of positivity in the forward Kumo there, but not very much. In terms of the momentum, you can look at the Kijun Sen here in red, which is 26 median average, and the Tenkan Sen 9-period median average here. And they are pretty good barometers for kind of seeing which way things are going. In the short term, yeah, we do have this kind of downwards momentum here, but the Kijun-sen tends to act as a magnet for price, and that's up at 35. So, um, I would expect, and you can see this behavior better on lower time frames. You can expect price to regularly want to check in on these. So I probably still expect some kind of a bounce. I mean, if anything, this trend looks a little bit unsustainable for the bulls there. So now that we've looked at the trend, I think it would be useful to kind of take another look at the the overall kind of shape of the structure that we're in, because I know this is pretty much the shape everybody was looking at. Whoops. Uh, so kind of I mean, people were calling it like a wedge. Obviously, it wasn't. It was a kind of, I think, our Lord and Savior trade spotting would think that it was, or he said that it was a kind of you know, like an equilateral triangle, perhaps, or even a bull flag. But obviously that scenario is pretty hard to pair with what's happened in the meantime. So the question is that if this is not a bull pennant, then what is this structure? Um, so could this potentially be a parallel channel rather than a bull flag? So if we just draw roughly a parallel channel in like this, um, then that gives you kind of an idea of what's been going on with price action here. We've kind of spent some time in the upper half of it. Could we spend some time at lower levels? Hopefully not, but as I say, I do want to give everybody the bull case and the bear case scenarios here. And I think there's an important kind of broader point to make about it's all well and good what's going on in the options chain and catching up on the latest news on Twitter and checking out social media to kind of get a feeling for how popular something is and the news on tickers and so on. But at the end of the day, you can only trade the chart that's in front of you. You know, could I mean maybe this is all Evergrande's fault or something. I don't know. I mean, there's I don't know how many times Evergrande has defaulted by now, 3 or 4 times, but there are obviously these kind of wider factors to take into consideration. But in terms of making profitable trades every day, you have to just trade what's in front of you. So that's kind of my take on that matter. So yeah, that's AMC overall. I know it's not necessarily whatever everyone wants to hear. If you have questions that you feel I didn't answer or that you'd like me to take a look at or analyze it in a different way, I'm all ears. I'll just flip over to GME because I know some people requested that as well. And GME did something very, very interesting in the last approximately 30 to 60 minutes of the day, and so you can see kind of a similar thing going on here with a parallel channel on GameStop. But there's a very important point that I want people to consider and to get out there amongst the wider community. And that is, let me just remove this. So that idea of there being a kind of a larger structure within which price action takes place, I think that's really important. So you can see how AMC is really struggling to, or has struggled, to maintain that kind of original structure that we're all looking at. And there is one key difference between AMC and GME here, and that was that in the last couple of days, it looked like the the framework of GME and the structure that everybody has been looking at for so many months was weakening. And I would draw your attention to these two very important areas here and today and yesterday. Um, so I think there is probably an interesting reason why the last 30 minutes or so was when all the price action happened on GME today. And perhaps it's Composite Man. Hello, Dave, if you're out there, you're watching this. I don't know what it is, but I know that there seemed to be a very strong effort from bears collectively in one form or another to try and break this overall structure of, as I say, just higher lows, higher lows, higher lows, higher lows, higher lows. This bit in the middle, I'm taking that out because I think it's not important to the broader structure. This was really the key low here at 150 or so there, or 100, this 146, 147, and comparing that to today at finishing just under 160. This is massive news, and if I just zoom out to the weekly chart here, this is very, very important. Number one, you can see this is, it's not quite a doji candle, it's almost a doji candle. I think the body of the candle is a little bit too large, but for GME to finish the week on a higher low like this compared to here, the weekly finishes at 151 back in August, and before then, yeah, something similar way back in April, is absolutely massive news, because what that means is that the overall upward trend of GME is just not in doubt at all. So I was very, very pleased to see that GameStop was holding up like that. I won't get into all the indicators. Suffice to say they're holding up pretty decently, and I do hope that the positivity that will probably come around GameStop, I hope that kind of uh, almost by osmosis ends up in AMC as well, because I know that there's a lot of people that are really cheering both these tickers on and want them to both do very well. So thank you so much for listening to me ramble on about technical analysis. I don't have a script or anything, so I just kind of have to play it by ear and do it as I can. But once again, thank you so much for all the positive messages of support. I'm always available on Twitter. I'm going to drop my private Discord server down below in the description, so if you want to share ideas and learn from each other, because I really feel like retail, you know, they're just hyenas, these hedge funds and the big institutions, right? I think retail has got to stick together. We've got to educate each other. We've got to protect each other, and that's kind of why I set that up. So I want, if you're positive about learning and you enjoy educating yourself, then definitely feel free to drop in. So if you liked the video, leave a like. If you disliked it, leave a dislike. Donate generously. No, I'm kidding. Please don't. I just enjoy technical analysis, honestly. So yeah, thank you so much for watching, and I'll see you in the next episode.